Good morning, good afternoon, good evening, everyone. And thank you so much for joining Asia Centre today. Welcome to our first webinar of this back to school session. And also welcome to our new office on 75 Boulevard Haussmann in Paris. Today's webinar is entitled Why, How, and Where to is Asia.
Good morning, everybody. Yes. You guys hear me?
Yes.
Okay. I'm going to proceed with the presentation. Hi, my name is John Miller. I am a journalist, formerly of the Wall Street Journal, where I covered trade and mining for 13 years. I now work for Trade Data Monitor, which is the world's premier source of trade statistics and data. And the origin of our presentation this morning, which is to look at what's happening in oil and gas trade in Asia, and especially given the context of the global economy in 2022. I am going to...
So John?
Yes.
So we're back, and sorry, everyone, we had a bit of a power struggle here, so I'll just complete the introduction. So back to, keep your slide, it's fine. We're back to this sequence, apologies. And I was just going to say that earlier this year, we met with TDM's founder and President John Basher, and this led to a substantial relationship between TDM and Asia Centre, and we're delighted about it. TDM is the world's top supplier of trade statistics for businesses and government in the world, and we're excited to hear from them. So I'm JD Mounier, and I'll be your moderator today. Hopefully it'll be stable from there on. On the panel, we have John Miller, who just introduced himself, we'll get him back, and he'll speak for 20-25 minutes. Then we'll go to a panel with Jean-François Dimeglia, the president of Asia Centre, and with François Issa. Is he on mic? Not yet, all right. And so, and then we will hear from the audience with your questions. So, John, please kick us back in for your presentation. Back to you.
All right. Thanks, everybody. Again, I am the Chief Economic Analyst for Trade Data Monitor, and we're going to talk about oil and gas and demand in Asia, which is, I would say, one of the top 3 or 4 topics in global trade right now. Just a note about trade statistics, if you're not familiar with it. So all our data comes from the HS code system. So anytime a good crosses a border, there's an HS code, whether it's a container ship with iPhones or a tanker with oil. It's counted by national governments, which we then collect the numbers and tabulate by quantity, price, and value. So we have price data, we have quantity data, and overall shipment value data. We cover over 99% of global trade. So it's a true measure and for me, storytelling device of the global economy. And that's what attracted me to work for TDM. Our clients include multinational trading companies, consumer goods companies, NGOs, the World Trade Organization, national governments, anybody with a stake in the global economy. A lot of the key economic trends and geopolitical factors we're looking at, obviously COVID, the war in Ukraine, the need for Russia to reroute barrels as the EU embargo comes into full effect in December, the US-China geopolitical rivalry, the expansion of intra-Asia supply chains, which is really, you're seeing a lot in global trade reports, threat of a recession, development of hydraulic fracturing or fracking, and the US's emergence as a major energy power, the growth of the Chinese car market, which is an incredible driver of oil demand, supply chain shocks with delays, electric vehicles, and obviously China's Belt and Road Initiative, which not only concerns its exports, but also its demand or requirement for imports, which is what our focus is today. So the big energy picture, the top oil exporters are Saudi Arabia, Russia, Canada, Iraq, the UAE, and the US sneaking in there. And while the numbers have changed, the order is the same as it was before COVID, which is important to note. Now, the big picture is that the US and Europe are no longer the drivers of global energy demand as they were, say, 20 years ago. China is the world's leading energy importer, and not by a lot. So this includes oil, gas, also coal, also refined oil products, which is important to note. The US is still a major importer, the second biggest importer, followed by India, Japan, and South Korea. So you have 4 of the top 5 top energy importers, which are Asian countries. Natural gas is a different story. Australia is the world's top exporter, mostly to Asia, obviously, followed by the US, Malaysia, Russia, and Nigeria. So as I said, 4 of the top 5 and 9 of the top 20 importers are Asian. This is what this is a sort of more dense chart, but this is what our basic interface looks like on the Trade Data Monitor tool. And so we can look up anything going back 30 years and more, and it's presented in this kind of chart. So obviously the big picture is you have a stabilization of oil prices at a higher level, it seems. I live in Pennsylvania, and I drove by my first sub $4 a gallon gas station yesterday that I had seen in 6 months probably. So there is a stabilization of oil prices. This is a very interesting chart. So this shows you where China has exported oil from. And you see last year, this is by barrels, Saudi Arabia passing or taking off from Russia, and Russian imports decreasing, which is, we'll see, not what's happened in 2022. This is until 2019. So in 2022, you'll see, and we'll take a few minutes with this chart, as the year progressed, China started buying a lot more oil from Russia. This chart shows oil imports from to China in the last 6 months. So March to August 2022 compared to the previous 2 years. And if you look at the unit value, you'll see that China's paying a lot less, 10% less to Russia for the oils. This is HS code 2709. This is petroleum crude. And China, in effect, is buying a lot more Russian oil and at a discount, which was what we all suspected, but is confirmed by the trade statistics. And we expect to see a lot more of. We've been hearing traders saying that they have to move this Russian oil to a stable market, and China's refineries and storage facilities are that stable market. And you're seeing that now, and it's at a discount. So if you look at the overall quantity of barrels, it's gone from 285 million in that 6-month period in 2021 to 323.4 million in that period in 2022, which is a huge increase. And now this chart is incredible. This shows overall Chinese energy imports over the past 23 years, so right before China joined the World Trade Organization. And it goes from basically 0 to over $10 billion. And you see that oil is the one, which is the green line, the light green line that tracks overall energy demand the closest. So that's, again, 2709, HS code 2709 imports compared to gas and coal, which are lesser and also don't track overall imports as much. So oil is the dominant import. An important thing to look at is overall commercial vehicle or passenger vehicle sales in China, which is driving oil demand, and really puts to lie this idea that peak demand might be a problem. Peak supply was an issue in the energy markets for many, many years. And you start hearing talk of peak demand after the global financial crisis. And really Chinese energy consumption and car consumption and daily habits of Chinese middle and upper class consumers kind of solve that problem. I don't think peak demand is something that is to be worried about. Now, moving on to another consumer. So where is this oil going from Russia? It's going to China. It's going to India. It's also going to Turkey, which is not the focus of this talk, because this is the Asia Center and we're looking at Asia. But Turkey is also an important importer of this excess Russian energy exports, oil and gas exports. So this is looking at India imports before COVID and before the war in Ukraine. You'll see fairly large imports, mostly from the Middle East. Russia's not even in the picture. Fast forward 2022, you'll see Russia going from 13.7 million barrels to 92.1 million barrels. And here, India is not getting the same bargain that China is. So the price that Russia is exacting from India is basically in line with global markets. And I think that's important. I think it's important to note that the leverage that Indian buyers have is not the same as the leverage that Chinese buyers have, and that's going to have an impact on their consumption. So I'll just let you peer at that a few more minutes, because again, this is a very important chart, and we have it by value, quantity, and price of the barrel. Okay, now with our trade data monitor tool, we can look at who's importing the most Russian oil. Russian trade statistics have been hard to get during this year. The Russian Trade Ministry has been difficult to negotiate with, but using other countries' imports, we can look at overall Russian exports. So China is the top exporter or importer of oil from Russia, followed by India. And you see India leapfrogging there from number 5, or number 6 to number 2, beating out Netherlands, Germany, Italy, and Poland. So again, India becoming a major player on global oil markets. Now, trade with Russia is not only dominated by energy. China has also started importing more of other products, including iron and steel, aluminum, and nickel. And here you see the full range of what we follow at Trade Data Monitor. It is dominated by energy, but there's a lot of other stuff going to China from Russia too, and vice versa too. So you see a development of this China-Russia trade relationship that transcends energy and is developing on all fronts. This is just to show you how important U.S. Energy exports have become. So this is just the month of July, and you see huge increases, over 50% by dollar value. But that's mostly going to Mexico, but Japan and Korea are also important Asian buyers of U.S. gas, but not so much China. So you have U.S. gas going to Japan and Korea, and not so much China. China is, again, turning to Russia. Overall, China is now the world's #1 gas importer, beating out Germany and Japan. So just like it is for crude oil, China has become the key buyer and swing purchaser. Now, we shouldn't forget the role of Japan in global energy markets. It's still the world's #3 economy. It gets its oil from Australia, Saudi Arabia, and the US. Russia is in 5th place so far. This is the first half of 2022, and Russia is only the 5th biggest supplier to Japan. So Japan is in the market, but not the extent, again, of China and India. One thing we're seeing too, which is very interesting, is as China acquires all this extra oil capacity from Russia, it's re-exporting a lot more, and it's refining a lot more and developing its own downstream oil and petroleum hydrocarbon industry. So everything from plastics to refined oil products is going back out, and we're going to see a lot more of that, we think, next year and the rest of this year. So again, that's China's energy re-exports increasing. And again, next presentation, Turkey, but this was so shocking, I had to include it. You see Turkish imports from Russia rising to $21.8 billion in the first 7 months of 2022, from 7.3 billion, and its overall imports going to 55.5 billion from 22.7 billion. And you see where the country is marked confidential. That's certainly Russia, but this is what you deal with sometimes as a trade analyst. You have to surmise, because sometimes in this kind of sensitive geopolitical situation, and you'll see this sometimes with oil trade with Israel and Arab countries, countries don't disclose, but this is almost certainly Russian energy coming into Turkey, and some of it getting re-exported into Asia and the Middle East. So conclusions. Asia has cemented its role as the world's essential energy consumer. Peak demand is no longer something that needs to be worried about, again, because of the ferocious demand for oil, partly driven by Chinese car consumption. And Asia has rebalanced energy needs by replacing Europe as Russia's top client. Europe's going to buy energy from the US and elsewhere. India is an incredibly important, fast-growing market. And don't forget Japan, still a key energy consumer, the world's third biggest economy. And China, unlike India, has done a better job of leveraging its role by getting bargain prices from Russia on energy markets. And some of that energy is being re-exported into world markets and refined in China. And that is the conclusion of my presentation. Thank you for having us. And I believe this talk is being recorded, so if you enjoy it, please do share with your colleagues and friends around the internet. And I'll turn it back over to our hosts.
Thanks, John. This is fascinating. Really appreciate that. I'm going to jump right into our panel here. I'd like to welcome François, who is a member of Analyst and a unique expert on management with 4 decades of experience on the world since 2009. François, can you hear us?
Yeah, it looks like. Yeah.
Okay, great. Well, over to the panel. Jean-François, you want to start?
Yeah, thank you very much, Jean-Baptiste. Thanks a lot, John. Of course, your wealth of data sources is impressive, and I think you pointed out quite a few questions that we are all asking ourselves since the start of the war in Ukraine. I'm just curious about how the switch to new channels towards China was implemented. In other words, what you described is a change, at least for oil, then we will speak about gas, in flows to China from what used to be the case to other countries. So how was the logistics of these new flows organized, and how quickly were those flows organized? That would be my first question. Second question, with which possibly François Issard and I, because we had been posted in China before, would probably like to ask is, who are the main players in terms of implementing those channels? The big Chinese oil companies, second ranking traders, and in terms of refining, of course, we all know about the teapot refineries. Are they involved as well? Sorry for so many questions, but possibly that would be a start. And I will hand over to François. As for myself, I will stay on until 11:35, 11:40 Paris time, and then I will hand over to François and Jean-Baptiste, of course. John?
You are muted.
Yeah, hi. So we look at national government statistics. We don't follow individual corporations. We have some port data, but I would turn it over to François for the specifics of the corporate mechanisms and who exactly is doing the importing.
Okay. Thank you very much. Okay. Now, for the screenshot that you showed us, let's say it's in line with the economic situation in China as it is now. Now, if we look at, let's say, 1-2 years down the road, of course, China will not totally stop and come to a standstill. I still, we do have questions about the growth rate of China, if there is any growth. So how would you view China's positioning in the picture that you showed us if China's economy is slowing down and coming to slower growth in the next 1-2 years? Would China become a dishonest trader for oil?
I think if you look, I mean, the dream when China joined the World Trade Organization was that it was going to become a sort of magic market of 1 billion consumers. And a lot of Western companies have been disappointed, and Western governments have been disappointed as there has not been a sort of rebalancing of Chinese consumption driving consumer goods imports and sort of sustaining manufacturing elsewhere in the world. But in the case of commodities, I mean, the essential, I think steel has been an issue with saturation in Chinese steel, and copper and zinc and nickel and other commodities like that. But for energy, I think as you see in that car consumption or car purchasing statistic, there is incredible energy demand. So I think in that case, China is a reliable consumer of energy, just for consumer products like cars. It's also exporting a lot more cars now. We're seeing that a lot, and building a lot more cars in China. So I think that factor alone sort of cements China's role as a reliable consumer of gas and oil.
Okay, thank you. Thank you very much, Jean. Now, possibly last 2 questions on my side. What about the price impact of China playing a bigger and bigger role in those markets, oil and gas market? That would be my first question. And my very last question would be, how would the OPEC group and the OPEC plus group look at China's role in jumping into the oil market now as a major player and possibly a more active player in price making, because basically they are a big actor in the discount that we can see from the Russian oil prices?
Yeah, and Francois can speak to this more directly, but from what I've read, traders have been pretty desperate this year to find a home for some of this Russian oil, and it's not necessarily a choice that they want to make, to take the lower price from Chinese oil buyers. But I don't think traders who are trying to meet their bottom line targets have much of a choice, or have had much of a choice in 2022. As it stabilizes, I definitely think that China will be a price maker, as it has been for iron ore and for copper. I've talked to traders, people from big multinational firms from Switzerland who go to China, and they, I've had to do this for years for copper and iron ore, and I expect it'll be the same for oil.
Right. Francois, I'm sure that you also have some questions, John, on this presentation. So just go ahead, please.
Thank you, Jean-François. Thank you, John, for the presentation. Obviously, amazing numbers, not maybe very surprising as far as I'm concerned, knowing the role of China on the markets, and it's not new actually. The role, for instance, the impact of Chinese oil imports on the oil price has been a permanent feature during the last 15 years actually. Yeah? So this is not really new. I think the most important on my side, I would say the most important knowledge we get from the presentation, it's about the dynamics actually. Dynamics of trade adjustment based on the succession of crises, COVID first, and with up and downs. It's very obviously, I think the level of detail of the presentation is already quite good. I'm sure John could even go in more details analyzing the dynamics quarter by quarter, for instance, during the last 2 years, because for instance, on China, we have very erratic economic situation developing. COVID in 2020, basically a phase out of the economy during a few months, then a recovery, then with the inception of the incursion of new outbreaks of the pandemic, we have some reactivity on the economy. And then finally, in 2022, a very complex situation developing on the supply chains because of the lockdown in Shanghai and Jiangsu by combination. So this is not apparent, and when you get at the numbers more generally year by year, or several years by several years, obviously you are erasing a little bit of the dynamics which have been taking place. I come back on a comment made by Jean-François about how is this made? How is this, particularly from the X factor about redirection and all that? Obviously, the most important feature of markets dynamics are the companies. When you look at countries by one by one, you see some things happening, but you don't see who is doing it, and at the end, who owns the contract? Not the states, the companies, the corporations. And obviously, this most of the time are at least commercial secrets or sensitive data, and would be considered so in China, I guess. So it's not easy to say, but obviously the contract being owned by, for instance, in China, the Chinese state companies like PetroChina, like Kunlun, like CNOC, etc. So obviously these are the companies who are becoming more active on the global trading. In terms of for LNG, for instance, what is new from what I'm finding out from these numbers and these statistics that you are showing, John, is a real input or even impact of these corporations on LNG. I think it's not the first time, obviously, but with the magnitude that we see now, the redirection of LNG cargoes to Europe, for instance. I was not able to join when you started the presentation, John, so I'm not quite sure that you describe this part. But very clearly, China has sold LNG to Europe, particularly recently, taking advantage of high prices. So if you compare, for instance, India and China, you see India buying at the market price. You see China getting a bargain, so you can conclude that Chinese traders are better traders. You can also conclude that maybe state by state there are some differences in terms of geopolitics. But what you can certainly say is that the Chinese traders, companies, have been becoming very active and understood the dynamic of trading in the world. So is this going to be a new factor in the global markets? Because before it was not the case. I mean, China was importing what it needed, and even not relying so much on LNG, for instance, because of the insecurity of this type of supply. So that, I think that would be the first comment I do, and by doing that, I have also addressed a few questions to you, John. Maybe you have been able, even not showing, but some more precise dynamics in the markets concerning LNG and even oil, actually.
Yeah, thank you, Francois. So the trade statistics is to me, it's a very accurate and comprehensive look at these things, but it's also 30,000 feet in the air. And I really appreciate your perspective because on a certain level, my understanding of reality is incomplete without talking to people like you who know the mechanics of what's happening. So I did show the slide, which I'll share again, showing Chinese energy exports. If you can you guys see my screen now?
Yes.
Yeah, so we have this is this factor. Yeah. So this is all quantities, and the destinations are listed as Hong Kong, Singapore, and so this is the month of August, and so you have shipments going to Netherlands. I don't know enough about the mechanics of the market to say where the ones headed for Liberia are actually going, but yeah, there is ripples there for sure that are worth looking at. And I can follow up and share more with you later, Francois, or with anybody else who wants. I can give you more detail on what's going on with Chinese energy exports. And typically there's also 1 or 2 month lag sometimes in when HS bills of lading get reported and get tabulated by customs.
Just one comment about Hong Kong. I saw some redirection on Hong Kong and even Singapore. As you know, both of them, Hong Kong particularly, belong to the ecosystem of China.
Mm-hmm.
But even what it shows actually is that you probably need to clarify a little bit, because very likely behind Hong Kong and Singapore, you also have Chinese companies, I guess.
Yeah.
So it's probably China to China this way. After that,
yes.
About analysis of the trading, of the trade flow, it's a bit complicated.
It's complicated, yes. And we can also look at Hong Kong exports too.
Yes,
see where
that would need. Actually, I saw a question in the Q&A. It's a little bit about that. It's reconciliation of
yes.
One by one of import and export country by country, because to see if it's balanced or unbalanced. Actually, unbalancing would mean something.
Yes, and there are occasionally discrepancies. They're not huge, but they're noticeable in cases like this, where you have different pricing mechanisms where the exports won't match the imports. And we do a lot of important work with our statistics team and modeling and making sure that they do correspond. And again, I'm happy to provide charts to anybody who would like them, showing what's happening in March of 2022. Yep. And a couple other questions. I see a question about Qatar. If it's okay with you guys, I'll address that.
Sure.
And I was going to take the opportunity to just show you briefly what our screen looks like. So this would be, again, the interface with Trade Data Monitor. This would be Qatar exports in the first 7 months of 2022. You see pretty big increases to Europe. This is by dollar, so have to take into account the price inflation in oil prices. What is that? You can click here. You can see it's almost entirely fuels. So if you drill down again, you can get to where it's going: China and India, Korea, almost all to Asia. You can look at what's going to China. So it's gas, oil, and oil products. So if you look at gas, this is Qatar exports of gas. Korea is the biggest buyer, followed by India and China. And you can go here and look at quantity and see how much is going. So actually, Qatar gas imports are down overall, but up 25% to China. So there's a shift there. And again, we can drill down endlessly, and that's what makes this database, I find, so fascinating. A couple other questions. If India does not get a lower price than the market, what's his interest to buy it? I mean, I think just plentiful supply, Francois. What do you think?
Let me see again.
The question is, if India is not getting a bargain, why is it buying Russian oil? or gas?
Well, it's probably a lot of geopolitics in it. Again, I don't know about the contract, the commercial contracts. So there are commercial contracts behind all that, obviously. What we can guess is that there is an activation of an agreement between Russia and India, which is not of the same vein in terms of commercial parameters than the Chinese have achieved with Russia oil and gas. I'm guessing you know, and all our participants know, that the import of China from Russia through heavy infrastructures like gas pipes and oil pipes have taken ages to materialize. And the reason, there are different reasons. There are physical reasons. First, obviously, feed production preparation on the Russian side, making sure the upstream ready to export, the produced sent to export, construction of infrastructure, and financing of these infrastructures to export them to China. But moreover, it's a price. Most of the time, the negotiation have taken ages on the price. I have experience on that. And I can tell you that, for instance, for the West East pipeline, which the gas is not coming from Russia, it's coming from Central Asia, but still, it took several years down the road of the physical and material negotiation to shape up and to finalize. Same time for the power of Siberia pipe, it took 6 to 7 years of commercial negotiations for the price. On top of the discussion on the upstream participations, which eventually the Chinese didn't get on the Russia side, but also on the infrastructure, and Russia managed to get participation of Chinese investors in the construction of the infrastructure.
Yeah, maybe could we just touch back quickly on Japan, because basically from what you described, there is a risk for Japan to be marginalized for one, geopolitical reasons, and possibly as well for the rebalancing of volumes which are going to China. Is there a real risk for Japan's energy security in this picture?
Is that for me or for Francois?
To you, you're the speaker, and Francois would probably add something.
Okay. Is there a risk to Japan's energy security? I mean, to the extent that Japan has important leverage in buying power and important supply chain relationships with its key suppliers. So I think I showed that chart, and it was Australia, Saudi, and the US. That doesn't seem to me like something where there's a lot of risk in the short term, but Francois can complement that answer.
Yeah, I will agree with you. I think, as usual, the market will invent what is needed for continuing to act. There is always a buyer for sure somewhere, but at the end, yeah, price will become an issue, and a seller will get to the best buyers. So it's all going to be a question of price. After that, yeah, I mean, I trust Chinese traders to be very their attitude being typically market oriented. So I don't think this would hamper, the fluid development of the market. If Japan wants to buy resources, there will be resources available at a certain price.
And I think one thing which I found fascinating in the last few years is there's a lot of talk of supply chain shocks and supply chain issues, but I mean, ultimately global trade is on pace to be almost $30 trillion in 2022, a third of the global economy of 90 trillion. And it didn't break. The supply, as Francois pointed out, the market figured it out, and the ports and infrastructure essentially work well right now and are not overtaxed or over challenged. And there is more fluidity than one might expect or fear when there's all this talk of supply chain shocks.
So I just want to stop a second here, and Jean-François has to leave, so that was announced. And we welcome Clément Durif, who has just joined Asia Centre. He is one of our experts, and he will be participating in the Horizon Europe project that kicks off on November 1st. Welcome.
Thank you very much.
Clément.
Good afternoon, good morning, everybody. So I would say I'm a young expert, not a really expert, like a long expert, but I think I'm really happy to join this panel, and maybe I'll let you keep going, and I have some questions for John and Francois.
And you are an econometrist.
Yeah,
training.
yeah.
Okay, by training.
Input.
Right. I just want to add on Japan, what is clear that you mentioned that, Francois, but it's also the case that there is indeed long-term contract from TEPCO and the different producers for gas coming from Australia. Japan was an investor in some of the major projects in Australia. And also, let's not remember, they're starting a number of new nuclear reactor, or old nuclear reactors, I would think, and they will possibly be able to cut off some of the gas and coal and oil power generation needs. There's a couple more questions here from Alain Abes, and I'll let you look at these two questions, Francois and John, if you want to address these. One is about energy transition.
There's one about gas trade, and I'm not entirely sure what the question is specifically referring to. Talks about energy sovereignty, emergency, and will there be a rebalancing because of ecological transition? I'm going to share our one more chart here. If you look at this is the first 6 months of 2022, and it's by dollars because especially for gas, it's hard to get apples to apples, and different countries report different units, and so this is a way of harmonizing everything. But you see big increases in that transcend the price increase, the big increases in what countries are consuming and importing in gas, and especially in Europe. I mean, German imports by value more than doubled in the first, again, 6 months of 2022. And if you drill down and look at quantity, I'm sure it's going to be an increase in quantity too. So this is German imports, and see that this is complicated. I cannot explain what this GCV means. So we'll go back to dollars.
Maybe following up to that question, a question for you, John, about the database.
Yeah.
Do you have any? Do you see any patterns in terms of green energy production in China and Asia? Comparing, I think it's following up to the question about rebalancing from.
Oh, okay. It's a big exporter of things like windmills and solar panels, that kind of thing.
Yeah, exactly.
Oh, yes. I mean, in the U.S., there's been a lot of trade dispute cases about solar panels. But yes, China is an important exporter of solar panels and windmill technology. I will look up the, I don't know the exact HS code off the top of my head, but I can get those to you for sure.
Thank you very much.
Regarding the last question here on Myanmar, this is not a big country, of course, but it is geostrategic. Maybe Francois will have some thoughts about that and the trading.
I'm looking at it. You can, well, the situation of Burma compared to the other countries of Southeast Asia is quite unique, I guess. You know, they are a little bit, how to say, set aside by Asian countries, ASEAN countries. again, they are acting under the threat of urgency and emergency. In all these statistic number, you have to be very careful. Obviously, we wanted to analyze the effect of the impact of crisis, so we got it. But however, when you want to look at the long term, states will probably consider their own interest on the long term. And if they are not in an emergency situation, probably will be reluctant to support Russia too much. You also need to keep in mind that there are sanctions from the US. I don't think anybody wants to fall into the traps of sanctions from the US. Whatever trade numbers can show right now, and that gives me to a very important fundamental on this energy and or even more commodity, but particularly the one concerning energy. You really have to reconcile volumes and values, which John has behind his table there. But one by one, the evolution of volume, because volumes, obviously, they are the expression of the actual demand and supply. And then trading comes on top of it. First of all, to be honest, we need to get at the volumes, and then only look at the values, so the US dollar. And then after that, about the trading, knowing that there are redirections and re-imports, re-exports, etc. So you have to watch these numbers with a lot of precaution. You have a lot of caution.
I agree. And most of our charts were by volume this morning. And you're looking at overall, though, it's again a useful way of harmonizing. But I agree with you. And all time, my colleague points out that GCV, which tripped me up, was terajoules.
Thank you, Altan.
Ah, les joules, yeah, sure. Yeah, but you have the petajoule now, because we have to deal. It's even more complicated, yeah.
My point, being Europe is buying a lot of gas, I think is still a valid point.
Speaking about that, question here for both of you, but maybe John, perhaps first. Given the European sanctions to Russia, how effective these sanctions are from your point of view? In other words, how is the overall export dynamics from Russia on energy to Europe and to the rest of the world globally? And how do you see this evolving going forward into the winter?
Well, the important fact here is the European embargo on seaborne cargo taking a full impact in December. I mean, pretty much as we documented and as we conclude that these cargoes are going to go to Turkey, India, and China. The situation in Ukraine appears to be becoming more volatile in this month and next month, and so that is cause for concern. And I don't know what's going to happen, and I think it depends on what happens in Ukraine and what happens with the administration, the regime in Moscow.
François?
Well, I would say just Europe can only buy what it can. In terms of LNG, for instance, LNG purchase from Europe is constrained by the capacity of LNG terminal to accept more cargoes. And I think they are all operating at full capacity at the moment in Netherlands, in Germany, in France. After that, you have how to say, the domino effect on the infrastructure inside Europe, pipelines, gas pipelines, and gas storage. Gas storage are getting to full capacity as well, 95% in France. I think almost 90% in Germany. I heard those numbers very recently. So that means that all the pipes are full. Then after that, yeah, you need we will see what the consumption will be in winter. This is a climate issue. I mean, a meteorological issue. It depends if winter will be cold or winter will be warm like last year. I think the numbers shown by John are the expression, particularly those for 2022 first semester. They are the expression of the emergency stated by European Commission to get storage capacity full, okay, gas storage capacity full before winter, which going to be achieved. So, well, this is one of the dynamics. After that, yeah, the gas. There is still a lot of gas produced LNG in the US. Where will that go? And in other projects, in Australia, obviously, and Nigeria. Where will it go? It will depend on the consumption of those big countries. China, we have, I think, earlier in the discussion, I think Jean-François or Jean-Baptiste, you raised the issue of the economy of the status of the economy in China. This is another big question, you know, because every glimpse of consumption in China impacts markets. And quite frankly, the economy is not faring very good right now. So whatever winter will come, obviously, and consumption of gas will come as well. But still, there is no good economic parameters to sustain a growth in consumption other than the one from climate, from meteorology in the northern hemisphere. So this has to be looked at very closely. But beyond that, but there is gas. There is not lack of gas on the market. So even with the stranded assets of Russia now, because what is happening now quite clearly, the Western Siberia gas is not flowing to Europe anymore, but is not flowing to China either. So because it can't, that would take 10 years to 15 years, or maybe accelerated, let's say 10 years to go to China. So Russia, sanctions on Russia are working on that.
And one last question for you, Francois, if you read that, is there a future for foreign oil and gas companies in China?
Interesting question. Who's that coming from? It's an anonymous. Okay. Alors, oil and gas companies. First of all, oil and gas companies in the Western world, they are all becoming energy companies. I think it has to be raised and to be known. Yeah, I mean, there will be a future for energy companies as long as they move out of oil and gas fast enough. I could rephrase the question by saying, is there an oil and gas space for oil and gas foreign companies in China? All in the hands of Chinese administration and DRC. This has been actually, the upstream is open in China for oil and gas now. You don't need to set up a joint venture anymore normally to access exploration licenses in China for oil and gas. But this is a regulation. After that, the practice is another matter, like always in China. So it's another story. What I can tell you is, and this is not a secret, you can see that all the major oil and gas international companies are still operating in China and they are also active, very active in the renewables in China. So they are also moving to becoming energy companies.
Okay, any other comments from the speakers, closing comments, perhaps John?
Yeah, well, thank you so much for having us, and thank you to Francois, especially for that essential intelligence, which I can't provide because I don't know as much about the oil and gas industry and its corporate specifics. I will say that trade statistics, in a way, is very valuable because it also includes data that companies do not want to disclose, and that by tabulating it gives you a picture that can't be spun, that is free of kind of corporate marketing or government spin. And I think I find a lot of value in that. And I think you put them together, you get something really illuminating and enriching. And I think we had that this morning. So I really appreciate you guys putting this together. And please, for our audience, please contact us if you want more information, and share this around when you get the recording.
François?
Yeah, thank you very much, John. Yeah, I think your data was quite precious in illuminating a few recent trends, which obviously are quite different from the long-term trends that we were observing during the last decade. So this is a new era. The question being, is it a new era? How long is COVID going to continue? Zero COVID policy continue to driving the economy in China. How cold is going to be winter in Europe and in China as well, and in US. Those are questions which are left pending, and that we will obviously get back to John to get another picture at next year, at the end of spring. Overall, yeah, I think what is very important is to realize that the global markets are quite dynamic, and there are even more tools now to react to these dynamics than they were before. So market will find its balance, always find.
Well, thank you. Let me just close with a couple of announcements for all of you. I want to thank our speakers, Francois and John. Thank you so much. Thank all of you. I want to say that we will send you some slides and the recording of the event. We will have a webinar on Friday, this Friday, on the 30th, on another critical component of the world trade, which is semiconductors. So please join us. You can register on our website, asiacent.eu, and we will welcome a panel again, and hope to see you soon, either on Friday or for another webinar with John in the future. Thanks to all. This concludes our talk. Have a great week. Bye-bye.
Bye-bye. Thank you.
Very much.
Merci.